Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 7th, and want to take just a brief moment to just discuss what markets did last week as the S&P 500 finished the week on a positive note, up 2.5%. The mid-cap index was up even higher, up 3.51%, and the small caps, as measured by the S&P 600, were up the most, up 3.7% on the week. But as we've crept into this week, volatility has crept right back into the market. And this really all goes back to some of the economic data that we got last week. The unemployment rate ticked up a little bit, even though we had a positive jobs number. Some of the economic data has been good, some of it has been bad. And we were in an environment where bad economic data was good news for the stock market. Now we're kind of in an environment where bad economic data is just bad for the market. And one of the things that we've been watching closely, and I pointed to a couple weeks ago, is just watching that 10-year Treasury. And right now, as we're talking at 12:49 on Thursday, the 12-year Treasury is hovering right around 4.27%. And what that is doing right now is putting a proverbial cap on stocks. It is putting a stop on stocks, and volatility has crept in as interest rates creep up. And the reason the interest rates are creeping up is because of some of the economic data that we're getting and some of the inflationary data that we're getting. There is fear that the Fed's going to raise more and do more. While we've come down so drastically in a year and a couple months, from 9% all the way down to 3% on headline CPI, it might be very prudent right now for everybody to just pause and allow some of the supply to catch up to the demand that is there, and understand that demand is waning. The other thing that we want to point out too is just understand that volatility may be here to stay for a little bit. We have the wall of worries getting a little bit taller in the equity markets as we're seeing record high credit card debt. Student loan interest has started up this month, so our interest is accruing this month. Payments are due next month. That's money that's going to be sucked out of the economy. There's concerns over commercial real estate, and that's really going to be more a geographical issue. But what that's causing it to do is causing banks to be more conservative on their lending. And banks have pulled back significantly on what they're doing to lending. That is another constriction on economic growth and economic activity. So while we don't foresee anything drastic to do right now, we're monitoring the situation. The fundamentals still remain very well from the earnings side. Corporate earnings still held up very well through the second quarter, and the expectation is for earnings to increase from here. But just understand that there's some things, and we are more on the fundamental long-term investing side, but we also track the technical side, and what we do on the technical side follows money flows. And what we're starting to see is the positive breadth and the positive money flow starting to kind of break down a little bit. Nothing to sound the alarm about yet, but just know that we are actively paying attention to it and monitoring it. But be prepared for a little volatility here. But if you're a long-term investor, just look at opportunities here if you have extra cash on the sideline to find something that's going to get beaten down here. And a lot of what you're seeing here in the markets, what worked last week is not working this week. And one of my favorite things that I like to follow is the equal weight S&P 500. That really tells me the health of the index itself. How are most stocks doing that day? Are they doing better than the index or worse than the index? The encouraging thing that we're seeing this week is a lot of the big pullbacks are in your big cap tech names, where most of the gains have been so far this year. The average stock is holding up okay in this environment. But be prepared for increased volatility, and if you have questions about how to deal with that,